Good afternoon. This is Jonathan Satovsky of Satovsky Asset Management, January 30th, 2018. And we're about to finish January with close to record highs for global markets. And I wanted to use this opportunity to talk about two topics that are near and dear to my heart. One is around trust, and the second is around the best. A very dear friend of mine of the last 25 plus years said, I just don't trust the financial markets. Now, this is the same commentary that this person has shared with me for over a decade. So, not trusting the financial markets is something that has caused great pain for a lot of people, because if you trusted the financial markets the last 100 years, people would have been very, very well served and accumulated tremendous degrees of wealth. And the evidence is there that over time, patient long-term investors have been very nicely rewarded. But that lack of trust is really pervasive throughout our society, and I think it leads to a lot of behavioral anomalies throughout our culture that can be explained by that fear or lack of trust. And it's no wonder. I mean, clearly the headlines every day cause people to react and question whether they are on the right path day in and day out. In fact, I got this study on endowments today and found that the endowments in the world, the average endowment in the world, all endowments, when they roll them all up, they found that the average endowment holds only 16% in US equity exposure versus 52% in alternative investments. So clearly, the endowment world doesn't quite trust the financial markets either, and may have missed out on the last 10 years, which have been very robust for the US equity markets. And theoretically, endowments have the longest time frame, so theoretically should be very, very long-term investors. So it's really fascinating. In fact, going back the last 10 years, the U.S. equity markets have actually performed very nicely, very adequately, including the financial crisis. There has been, and if you think about best and worst, the best have actually been large growth companies, and the worst have been small value companies. Now, go back to history, and you would say, well, small companies have been the best in history. But in the last year, you would have been the worst if you were in U.S. small companies and the best if you were in large growth companies. So it's time frame dependent on what's the best or what's the worst. And the key is finding a philosophy and a process and a strategy that you can adhere to, and you understand well enough your temperament. And this is a really complex job for financial planning and investment management, to understand someone's temperament, and for someone to understand their own temperament of how they're going to react through different market climates. The fear of not being the best, of missing out. Oh, my brother got a better return than me, or my friend made a lot of money doing blah, blah, blah. And so the fear of missing out or the fear of losing money. So there's a lot of fear, and a lot of people aren't that comfortable in their own skin of just sitting where they are. And sitting still is actually very important. In fact, I mean, it's amazing. This last year, we've gone almost 399 days without a 5% correction. So, it wouldn't surprise me if volatility picked up. But if you look at this, you've seen a tremendous period of calm. If people can't sit still during a period of calm, what is it going to look like when volatility picks up? And you see this in the net flows of long-term mutual fund and ETFs in the last 5 weeks. You can see massive outflows in U.S. equities, 22 billion and 9 billion in 2 of the last 5 weeks. I mean, it's astounding. And it's been one of the best, most calm periods in history. So it's really a mystery of how we can try to get centered and really get back to the basics of thinking long-term, of being patient, of being comfortable with a path that we're on, so that we can capture more of the returns that we're deserving of over a 10, 15, 20-year period of time, rather than switching paths every time that there's something better that comes along. With that, have a wonderful rest of January and a prosperous 2018.